What's up everybody? In today's lecture I will explain an ICT trading strategy for crypto like Bitcoin, Ethereum and small cap coins. I have backtested a lot of ICT strategies on crypto, but none of them works perfectly. But this strategy that I am going to show you in a moment works so well and the win rate is over 80%. I have used it for about 2 months now and my win rate is over 80%. And believe me, after watching this lecture, you will shift from Forex to crypto because this works so perfectly, it will amaze you. And I will explain it in detail to make it understandable to anyone who is new to ICT trading strategies. So let's jump straight into the lecture now. Okay, so I use this strategy on the 2 hour. So let's suppose this is a candle on the 2 hour. Okay, the price is going up like this. This is a 2 hour candle. Then again you can see that there is a next up closing candle. Okay, and then comes a candle and it closes below this previous candle like this. Okay, this is red, like the price was going up, and then all of a sudden one candle closed below it, and you can see that this candle didn't sweep the previous candle. Okay, so this is called a bearish order block. Okay, if the price is going up and suddenly you get a down closing candle like this, this is called a bearish order block. And then if you get a next candle like this, you can see there is a gap between the top of this candle and the bottom of this candle. This is called a fair value gap. Okay, I will color it black. This is called an FVG or fair value gap. I will write it here. This is called FVG. Okay, so what happened? The price was going up and all of a sudden you got a down closing or red candle, then another red candle, and you got this fair value gap, the gap between the bottom of this candle and the top of this candle. So this is called a bearish order block. What happens in such bearish order blocks is that the price usually goes up into this fair value gap and then the price goes down. So ICT traders usually short at this point and they put their stop loss above here. Okay, above this candle, above the wick of this candle. So they short the market here, and then there are bullish order blocks in which you get down closing candles like this, red candles. This is a 2 hour candle, another 2 hour candle, and then you get an up closing candle like this. Okay, a green candle. Okay, then another candle. So what happened? You got a fair value gap here too. This fair value gap isn't much. Sometimes you get it, sometimes you won't. Okay, but a perfect order block usually has a fair value gap. Then the price goes down into this fair value gap and it goes up. So ICT traders put their longs order here and they put their stop loss below this swing low. So this was all about the order block. This one was a bearish order block, this one was a bullish order block, and this one, the black color, this is the fair value gap. So this is how the ICT order block concepts work. Usually they short here and usually they long here, but we won't do that in crypto. In crypto the thing is a bit different. There is another concept, another ICT concept, which is called a breaker block. What is a breaker block? In breaker blocks, what happens is that the price goes down like this. Okay, after this bearish order block. So ICT traders or some other traders usually have their orders here. So what the price do is the price goes up. Okay, the price goes up like this and it closes above this fair value gap. Okay, this was the fair value gap and the price was supposed to go down from here, but you can see that this candle closed above it. The body should be above this fair value gap. Okay, so now this is a breaker block. First this was an order block and the price was supposed to go down, but here this candle closed above this fair value gap, so now it turns into a breaker block, and what will happen is that the price will go down into this fair value gap and then it will go up. So people who have orders here, they will short here and they will hit their stop loss. Okay, the price will go up and it will hit their stop loss. Now in this case the price was supposed to go up, but what happens is the price goes down like this okay, and it closes below this fair value gap, okay, and then it goes up to this, it provides a support and the price goes down, okay. So in crypto we won't use the order block, we will use this breaker block concept, and now I will show you the example on this Bitcoin chart, and also I will explain what's going to happen next, okay. Okay, so you can see that this is an up closing candle. I have colored it gray. This is usually a green candle. You can see it is a bullish candle and it is an up closing candle, and then there is a down closing candle. You can see it didn't sweep the highs of this candle and it closed below it. So this is an order block, okay, and this is the fair value gap. So what traders do is they put their short orders here and they put their stop loss here, but you can see that the price went up and here it closed above this fair value gap, okay. You can see it closed above this fair value gap, the body has closed above it. So now this bearish order block has turned into a bullish breaker block, okay. So what will happen is the price will come down into this fair value gap. This is where your orders will be, your long orders will be, and then it will go up and you will put your stop loss below this swing low. So this is the fair value gap, this there you will put your long orders, your stop loss will be here, and you will target the highs, okay, the previous highs. So these are the previous highs and it will sweep these highs, okay. So you can see you longed at this point and it went up, okay. It's a 2 hour trade, so you can keep some big targets and don't worry about this big stop loss because it's a confirmed trade now, okay. Usually it goes up. Now I will show you another example. What happened today is yesterday we got this bearish order block, okay. Got an up closing candle, then a down closing candle, there was a fair value gap, okay. The price was supposed to go down from this fair value gap, but what happened, the candle closed above this gap, okay. And again, as I said, the price will go down into this fair value gap, okay. This is where your orders will be, the stop loss will be below here, and now price will go up and you can see it has already swept the previous highs, okay. So with this strategy you can see that in 2 days you got 2 successful trades and you can back test it yourself. You will get so many trades on all the altcoins, on Ethereum, on Bitcoin, and your win rate will be over 80%, okay.